All right, I think we can start now. It's 5 o'clock here in India. So first of all, good evening, good afternoon, good morning to everybody who is starting to join in. I think we should give everybody a couple of more minutes. There are many more people who have registered for this knowledge series, so we'll just give a couple of more minutes. In the meantime, as I mentioned, welcome to everybody. This is the third session in our knowledge series at Benori. It's around private equity in 2025, balancing opportunities and uncertainties. The first two, and maybe some of you had attended that as well. The first one was around the GCCs, the Global Capability Centers in India, and the second one was around sustainability and so on. In the meantime, as we are waiting for some people to join in, if people who are joining in, if you could just type out your names and also the organization that you are representing today, that would really be nice. Um, as we go along, my suggestion would be that any questions that you might have, please start posting them in the Q&A window. And after we have finished our presentation, Suchi, my colleague, and myself, we will try and answer as many of those questions as possible. Last but not the least, towards the end of the webinar, as you are exiting the session, a feedback form will come up. So please do fill that out. It will really help us in becoming better. So great. We already have about 50 participants, and I'm sure many more will join. So why don't we get started? So again, welcome to everybody. And as I mentioned, please start putting out your names and your organizations that you represent. So as mentioned earlier, and as you would have seen, today's knowledge session is around private equity in 2025. We have seen um, a very uncertain year has gone by, which has not only created more opportunities, but at the same time, many more uncertainties. So the way we have organized the current session, first, I would spend 12, 14 minutes and take everybody through the PE investment landscape. Historically, what did we see in 2024 in terms of fundraising, in terms of deal activity, and also in terms of exits. Then also, I'm going to talk a little bit about what are the forces at work, what are some of the trends that we are seeing, and what could potentially be an outlook for 2025. After having done that, I will hand it over to my colleague Suchi, who is based in London. She would take everybody through, what are we seeing? The private equity segment is a very big segment from a Benori perspective. So, what are we seeing in the marketplace? What are some of our clients asking us to do? How is Benori helping out in this segment? And so on. And then finally, we would open it up to question and answers. So please do keep on typing out your questions as we are going along if there's something that you want to talk about. So with that, let's dive into the first section. So if you really look at the value chain of private equity, it starts with fundraising. Obviously, if you don't have funds, you can't invest. Then you take those funds and invest into some deals. And then finally, over 5, 6, 7, 8 years, depending on how that particular investment has gone, you would end up in trying to exit that particular activity or that particular portfolio company. In terms of fundraising, we saw that 2024 was not that great. and especially as compared to the previous years, and I'll talk a little bit more about that. However, the good news was that deal activity picked up, and definitely exit activity picked up significantly in this year. What you will see as a theme throughout this session is the role of AI and the growing importance of AI across the private equity value chain. And we will definitely talk more about it, how funds are using AI, why is AI becoming important, and so on. If I continue, this is the first slide around fundraising. So, as mentioned just a minute back, in 2024, the total funds that were raised in this year by private equity firms was about $750 billion. But a bit alarmingly, if not alarmingly, but at least a worrisome trend was that the average time it took to raise a fund is about 20 months. Now, after post in the COVID years, obviously there was a lot of fundraising and fund deployment activity. But so from 2019 till now, there is an upward trend from 13 months to about 20 months. Now, a lot of this can be explained through the fact that there was a lot of dry powder. Um, and because of the deal activity going up somewhat, but still the geopolitical risk, and we'll talk a little bit more about it. A lot of funds wanted to sit on capital. So there was a lot of dry powders, hence there was no requirement to raise fresh funds. And also LPs were pulling back a little bit, and they were a little more concerned about deploying fresh capital into new funds. And some of the GPs have tried to accelerate this process of fundraising by offering more co-investments as such. As we are going along, please, people who are joining, please keep on typing your names and your organizations, and also in the Q&A window if there are any questions. Coming to deal activity, clearly there was an increase in the deal activity, almost $1.75 trillion worth of deals happened. Close to 19,000 deals happened in this year. Some of the reasons that we were able to figure out in our research were lower interest rates, tighter credit spreads, and also, interestingly, the average deal size or the deal value has gone up, albeit only by about 10% from $83.7 million to about 91.5. While deal activity remained subdued as compared to 2021, green shoots have definitely emerged, and our belief is that in 2025, this should only accelerate. If you look at the different areas in which um, or verticals that a lot of the deals happened in, clearly technology, whether it's AI, automation, a lot of demand around data centers, and as always, US tech remains at the center. Huge amount of rebound in the US around the tech related, and as we would see even in healthcare and energy, a huge amount of rebound in the US in deal activity. Healthcare was the second big area, about $115 billion worth of deals. Biopharma within healthcare specifically was called out in our research, driven by investments in clinical trials, IT infrastructure. And lastly, energy, that's a no-brainer, I think. Everybody has a play, and this is only accelerating, whether it is in the clean energy segment, um, technological advancements, innovation in energy storage systems or smart grids. And here also one saw a 30% increase YOY in 2024 in the US. Um, One of the factors why technology might have seen such a big increase was clearly the returns that are being there, which is and there is some amount of alpha there, right, over the market returns or other sector returns. As you can see, it was almost a 2x return versus a 1.6x return. Um, One does think that in 2025 also there might be, of course, there are uncertainties, but this deal activity across these sectors, and maybe there are others that also prop up in 2025. In terms of geographical split, what we saw was that mentioned North America and specifically the US, 21.4% increase in the deal activity there. Um, IPOs expected to continue to be performing well in the US. There are about 700 unicorns in the private market, so many of them might list or raise further capital. And technology remains the top focus in 2024. Europe was an interesting story. Just prima facie, outside in, hypothetically, one would assume that not much action is happening in Europe. But because of economic challenges leading to undervalued assets, private equity firms capitalized on that, and uh, buyout deals went up by about 78%. Now, US investors constituted over half of the UK private equity deal value. And of course, the focus in Europe as well was on technology and ESG. APAC was basically flat, and I guess a lot of this is driven by China. India, of course, as all of us know, had a great market and great time in 2024 from a private equity perspective. But so, in some sense, it netted out. There are other countries where there is a lot of activity: Southeast Asia, Vietnam, Indonesia. And Japan might be looking at further significant investments. Middle East and Africa, for some reason, was somewhat on the lower side. There was a decline. Um, Now, Middle East especially could be because of the geopolitical uncertainty, the sort of the you know sort of the war which is there, which is going on. Um, and then Africa, there is the outlook is also more uncertain than in the previous years. LATAM is a smaller market, but still there was a quite a massive increase in LATAM, especially in the digital transformation areas and also in the energy areas as well. But again, LATAM is interesting because it is mirroring the global trends around digital transformation, and then clearly the energy space. Of course, the challenge in LATAM remains the volatility of the foreign exchange rates. I would again urge everybody to please type out questions as we are going along. Now, coming to the exit part and the final thing, um, in the value chain of a private equity firm, the in 2024, the total exit value was about $900 billion, close to 3,800 exit deals. And then also the average the holding period has come down by from 6 years to 5.7 years. But maybe there is no major trend here, because if you see across the years, it's pretty much hovering around 6, a little bit up, a little bit down. Interestingly, the increase in the average exit deal value to 237.6 million last year from 213 in 2022 reflects growing investor confidence as well. Now, very interestingly, from a type of exit, the sponsor acquisition, which is really a fund to fund kind of a thing, that has gone down from 49.4%, or actually, that is the corporate acquisition. But the sponsor acquisition has remained flat, but the corporate acquisition has gone down from about 49.4% to about 41.8%. We do expect the global IPO markets to continue to show positive momentum, and the expectation is that this trend should continue. One very interesting thing, as I mentioned earlier, also, although the sponsor acquisitions have gone down, the GP-led continuation funds are becoming more popular, and this is a trend which we might see accelerating in 2025 as well. Now, what are the three major areas? Of course, there are other forces that work, and there are other kinds of uncertainties and discontinuities which private equity firms are sensing and feeling and strategizing about. But the three that we wanted to highlight are across geopolitical and trade risks. The second one was around ESG, and the third, absolutely around AI and Gen AI. On the first one, BCG analysis reveals that about 20% of private equity portfolio assets face geopolitical and trade risks arising from, clearly supply chain disruptions and then sector shifts as well. These risks are, compelling private equity firms to incorporate geopolitical insights into their management process. And of course, here again, AI is being used to predict geopolitical risk, scoring mechanisms, and how to address that particular risk. On the ESG side, there is increasing pressure on private equity firms to disclose sustainability data, such as emissions, social impact initiatives, what is the progress of their portfolio companies on net zero as such. Example given here is from ADB. And also non-compliance with the evolving regulations may put private equity firms and their portfolio companies at risk of financial penalties and reputational damage for sure. The last one, at least in my limited understanding, I think is going to be the biggest disruptor and the biggest discontinuity. It's around how do private equity firms address the AI and the Gen AI developments for their own internal working. So if you see BC Partners, it uses AI-driven APIs to analyze unstructured proprietary data for deal support. And as later Suchi would explain in a case study for a major fund out of UK, we have also helped them, in looking at their own internal data and trying to create some insights out of that. Similarly, Blackstone data science team uses advanced analytics and statistical methods. Now, I won't go through this, but across the value chain of deal sourcing, deal support, valuation and portfolio management, and of course, around exits, a bunch of different examples and some use cases for private equity firms to do this better. Now, just look at deal sourcing. I mean, 62% say that AI is creating new opportunities for deal makers. This is from a report where a survey was done. Similarly, on deal support, 44% say that AI has improved M&A teams' efficiency, and so on, right? So if we put all of this together and just quickly go through some of the outlook points, Um, the first is around increase in deal activity. We do expect with a stabilizing macroeconomy, with the US elections out of the way, with some amount of stability coming in the various geopolitical disturbances, there might be a more stable environment. IPO market recovery will continue to support, and PE deal volumes are expected to rise 16% in 2025 over 2024. Um, Similarly, I already mentioned this shift in AI, Gen AI investment strategies. Um, so here, and of course, over the last 3, 4 days, we have had this emergence of DeepSeek. So I think a lot of private equity firms are thinking about what is the impact and whether $600 billion of market cap destruction of NVIDIA is something which will sustain, and is there more to come? And then lastly, we do expect valuation multiples to remain stable, and there might be other stabilizing factors at work. So very a rich set of issues that need to be tackled by the private equity industry. Now, in many of those, Benori has a role to play with our clients in the private equity world. So with this, let me hand it over to my colleague Suchi, who can take us through a little bit about Benori, but then more specifically how we help private equity firms. Suchi?
Yes, thank you, Ashish. And thank you all for joining in our session. Really glad that you all could make it. Moving on from here, we've already kind of seen the overall PE landscape, and I'd like to talk more about the specific nuances with respect to the PEs and how they operate. But before we get into those details, just want to provide a high-level view of Benori, of the kind of work we do. We, of course, are a bespoke research support provider, so completely customized kind of support that answer the specific client questions. At an overall level, we have a team of around 130 people. Our main operational center is based in India. But in terms of the markets that we have covered through our research, and also in terms of our client base, we have a very global footprint, as you can see, kind of all across different regions. Can you, next slide, please? Yes. A quick view of the kind of clients we serve. Of course, we do work right across different kind of sectors and functions, but professional services is one of our largest target segment, one of our largest customer segment. And within that as well, it is mostly PE firms and consulting firms that we do support. Of course, it is across different kind of industries, but some of the key ones that we do a lot of work in, technology definitely is there, consumer and retail sectors, financial services, and then increasingly healthcare and industrials. This is where we are doing more and more work in. Now, coming back to the specific questions that we were discussing within the PE ecosystem, there are taking a closer look at the operational nuances that they are faced with across the deal life cycle, right from fundraising and target scouting to deal support and portfolio management. What are the key questions? What are the key data points, information points that they need support with? At the fundraising stage, it is really about identifying who the most active investors are, what are their preferences. Also, trying to lay out the fund strategies in terms of what are the focus sectors, the themes, the geographies that we want to keep focusing on. And another really important point here would be to figure out how you can make your own fund stand out. I mean, there would be a host of others in the market, so definitely there needs to be a differentiating factor to put you ahead of your competition. The next stage, target scouting. The need here, of course, is to identify companies that meet the vision of the fund, so to say. So that would meet the sector and geography criteria. So the key questions would really be around identifying what are the best indicators, what are the best metrics that we can use. And oftentimes these metrics would be more implicit, which may make it quite tricky to gather and analyze the data. Deal support stage, this really forms the core. The biggest thing here, of course, is a very detailed risk assessment that can flag the positives, but also more importantly, that can flag the challenges that the company may be faced with. So the important thing here is to look at the target company in comparison to its peers, benchmark its performance, its operational parameters, and also understand the kind of levels, the valuation levels that would exist in the market. And then, of course, the next stage for portfolio management. Here, the important thing is to provide the support that is needed for operational excellence, as well as the support that would be needed to support, not for any kind of growth and expansion initiatives. The underlying theme across all of these questions and all of these stages really is, and what we've also covered in our session earlier, is around how the new age tech-based tools can actually provide more value and leverage as we go along. Now with Benori's research capabilities, with our comprehensive secondary and primary research capabilities, we are excellently placed to support clients in each of these different stages, help them answer the questions that we've just discussed. I'll share a few project examples at all of these different stages that that will show you how we were able to create the right impact for the client. In the fundraising stage, one of the examples that I can share really is for a PE firm that was looking to launch its next fund in APAC. They really wanted a full macroeconomic assessment in order to support their fund strategy. This included an evaluation of various social and technological parameters as well. We looked at the infrastructure growth, the consumer growth, consumer demand growth, etc. And finally, were able to provide a report that helped them define their fund strategy. So a very holistic view, which they could then use. Another example along similar lines was where we supported an investment firm in identifying potential investors for its tech-based fund. The profile really covered a lot of details about those investors, their sector focus, the kind of themes they are interested in, the organization structure, and also the decision makers. Yeah. Target scouting. Now, this is where our secondary research, our desk research capabilities can actually provide a very good fit, both from the perspective of benchmarking high potential sectors and also then identifying the right kind of targets within those sectors. An example here would be where we supported a Middle East-based investment firm. They were looking to invest in the UK market, already had a few sectors in mind, but we did a two-step evaluation for them. It was a 2x2 matrix that we built out. One axis was looking at the market attractiveness from the perspective of size and growth. And the other was really looking at a more fitment criteria, depending on the fund's strategy and vision, how do those sectors really fit? So the idea was to highlight those sectors which rate high on attractiveness as well as fitment. Another example here within target scouting was for a global investment firm. They were looking to invest in the infra tech sector. We identified a range of different startups that they could partner with. Again, the idea was to track them on a range of different KPIs to help them shortlist the best suited ones from there. Deal support, now this forms the core of a lot of work that is done. I would say we are excellently placed really with our primary research capabilities. With a lot of the work, a lot of information that comes in over here really is to provide an outside-in perspective Oftentimes, the data would not be as easily available or not as reliably available, and hence our primary research capabilities can add that additional dimension. One example was where we supported a client looking to invest in the sustainable food sector. The project really was done in two steps. The first part focused on the market aspects, looking at the key segments, the trends, the growth levers, followed by an in-depth analysis of the company's operations themselves. So we benchmarked this against 4 of their closest competitors. And this benchmarking included parameters around the product portfolio, their patent portfolio, the pricing level, the kind of partnerships they had, the kind of customer agreements they already had in place. So across all of these parameters, we benchmarked them. Another example along similar lines is from the healthcare sector. The ask was to evaluate real-world evidence solutions market in the US. Again, we built out a market model to calculate the total addressable market, taking into account specific subsectors, therapy areas within the healthcare market where the solution would be most relevant. And then looked at other players that were already operating in these specific subsectors and therapy areas to get a full perspective of the market. The final step, again, a few examples that I can give you where we supported specific portfolio firms in their growth journeys. So we can support them with data on the market, on customers, on competitors, anything that would feed into their own growth strategies. In this particular case, our client was a fintech company that had an anti-money laundering solution. They had multiple target segments within that fintech sector, brokerage houses, payment companies, banks, etc. And they wanted to quantify the market opportunity under each of these segments. Look at the other players. So that is how we help them build out their strategy. Another example from the consumer goods sector. This was for a beverage company where we benchmarked their pricing levels, their pricing strategies. So one step, of course, was to look at the pricing levels, but then going in much deeper to understand the trade margins, the kind of channel split they had, and various other factors along the distribution chain. One common theme that we've seen in the first part, and also that we have seen become more and more pronounced in our work, is the ability to handle large volume of data more and more efficiently. So that really is becoming a common theme in how we can create value for our clients. And with data being such a strategic asset, we do have very specific data focus solutions that can provide that kind of leverage. Our solutions really do help in data management, creation of a data set, and then maintaining it, data cleaning kind of functions as well. Here, I will just call out a couple of examples which were more data focused. So this was for a UK-based healthcare focused fund. We helped them update their deal cloud database. So they had a range of different companies, targets, investors as part of their database, and we filled in the data gaps about them. Also built out a taxonomy that was consistent across, looked at subsectors and categories within the healthcare space, and also different therapy areas. So we tagged all of those companies based on that taxonomy. The second example here is again in the target scouting space. It was close to 500 companies, 500 startups that we tracked on a bi-weekly basis. And again, the tracking was done for multiple parameters. Some of them were like the number of downloads, the number of social media followers, etc. And the idea was to be able to visualize them on a dashboard so that we can identify any changes in the trend and pattern. So as soon as there was an anomaly that can be identified, that particular opportunity can then be pursued further. And finally, would like to talk a little bit about our design and publishing solutions as well. We do have capabilities where we can create marketing ready material for our clients. In fact, we do that in a lot of cases for newsletters, thought leadership material, articles, etc.
Suchi, maybe, sorry to interrupt, maybe just a minute more. We have lots of questions to answer, so just please quickly wrap up in 1 minute.
Yes.
Thank you.
Yes, and yeah, so we are close to completing this part. Just on the final slide that I want to talk about, maybe very quickly, I can tell you about one effective way of providing this kind of solution and services, where we can have a dedicated team. Now, this team can be with analysts and senior analysts, so basically being managed by a project manager at our side, who is in touch with the main client contact. Couple of things that I'd like to highlight. One, the team itself can be leveraged by multiple stakeholders at the client side. Also, as they are working on those priority projects, one key advantage that does emerge out of it is the downtime that the team may have, or in between those two requests, we can actually work on a range of other projects which mostly don't become prioritized because of bandwidth constraints. So that is an important way which we have seen to work very well with some of our clients.
All right, Suchi, thank you so much for that. We have about 9 minutes left. I've gone through whatever is there in the chat window and in the Q&A. So Ibrahim, you had a question whether we will be providing the presentation. Yes, we would be doing that. And then essentially, Mohammed, you had a question that you would like to get some data from M&A activities in the MENA region. Just to be a little bit more specific, if you can just offline write to us an email, or we can engage with you, what you're looking for. Mostly, we should be able to provide this to you. Um, Karthik, your question was what were forces or risks deterring private equity activity in India in 2024, and any key themes or trends that are emerging? See, our assessment is actually 2024 was a great year from an Indian private equity investment perspective. And that's what we had highlighted in my part of the presentation, where I think 46%, we saw a growth of 46%. Um, I think 2025 might be slightly more challenging for a couple of reasons. Um, when you look at the APAC allocation of funds, China is making a very strong, resurgence, if you will. So, and also the US market is also expected to do well this year, continue to do well this year. So what we are seeing is that there is a quite a bit of capital flight away from the country, and that's why the stock markets in India have also gone down. So let's see what happens. But again, India is also making huge progress in terms of investments, and the IPO activity is strong. So hopefully it'll still be pretty good. One of the areas where we are seeing some activity is industrial tech and industrial technological driven industrialization and manufacturing operations. Um, Karan, you are asking how Benori can help clients and so on. I think a lot of the example that Suchi gave was really around that. And if there is anything specific that you would like to learn, then maybe we can look at this offline. Um, Rajat, you have mentioned that this is interesting, this was helpful, and there is significant work that we can do together. We will definitely give you a call, and we should discuss how we can work together. Um, so that sort of answers all the things which have been mentioned in the chat window. Let me just quickly move to the Q&A window, there are some questions here. So Vijay is asking, do you also offer industry primers that can be updated regularly? Suchi, do you want to answer that question?
Yes, absolutely. We do that. We can do that on some of the really niche segments as well, and customize it according to your specific questions. There, a lot of times, what we can do is create that sector primer, and like you said, update that on a regular basis, maybe a half yearly or annual basis, depending on how volatile or what the requirements really are.
Right, right. The other question is ESG influencing private equity fundraising? No, we cannot comment on that, whether it is impacting fundraising per se, but definitely, as I had described, all the changes that are happening, which are related to ESG, technology, regulations, reporting, all of that definitely has a big impact on the private equity industry. Of course, LPs also in many cases would like the funds that they are investing in to be more ESG friendly investments. In fact, we at Benori had done a project for a not-for-profit in UK where we track 80 to 100 funds and how are their ESG investments doing, how are their sustainable investments tracking and things like those. So our sense is and our view is that this will continue to be impacted by the changes. Now, of course, President Trump has withdrawn from the Paris Treaty related to climate. So what impact, negative or positive, that has on the private equity industry, time will tell. Um, Suchi, there is a question, another question, which maybe you can answer. The question is, do you also use databases and automation to turn around target scouting requests quickly?
Yes, the short answer to that is yes, we absolutely do. We do have a few databases that we subscribe to. And the idea would be one, of course, these can be the operational metrics from the databases. But in addition to that, we can also use a lot of other implicit signals, the kind of hiring activity, the kind of investment that has gone in to identify some of those key opportunities in the sector of interest. And the point around doing it quickly, that actually is our USP. We can kind of mobilize our teams really, really quickly on that.
Yeah. So I see that some people are dropping out. So, as you drop out and we have only about a minute left, please do fill out the feedback form that comes up. And that will only help us becoming better. Maybe the final question is from Ibrahim. How about your Sharia compliant private equity investment tracking? Ibrahim, you can absolutely do that. We do have a solution called tracking or pulse, where any specific given topic, we track regulations, we track solar energy projects, we track life insurance industry, we track consumer products, we track pricing. So specifically to this ask, we can create a solution for you, and then depending on your requirements. So if you would like to talk to us, then we can definitely set up a call separately or connect you to our colleague in Dubai, or wherever you are. So with that, I think we are completely out of time. I would just like to say thank you so much to everybody. This presentation would be mailed to everybody who has attended, and we will also, put up bits and pieces and short videos onto our LinkedIn page or the Benori page. So thank you once again, and please do attend our following series of knowledge webinars. And as you exit, please do fill out the feedback form. That will just help us to improve. Thank you so much.
Yes. Thank you all.